Good morning, everyone. Hope you all had a happy Thanksgiving and had lots of turkey. Now let's talk about the markets. I think the markets should do well by the end of this year with the Santa Claus rally. The S&P 500 should likely hit 6,300 in my opinion, and Tom Lee from Fundstrat agrees. And it's likely that Bitcoin will go well above 100,000 by year end. First of all, for Bitcoin going above 100,000, we're seeing record ETF inflows last month. There was $6.2 billion into the Bitcoin ETFs. And there's a lot more media attention. There's more hype in Google searches. And with a Trump administration with a friendlier regulatory environment, ending Operation Choke Point 2.0, and a strategic Bitcoin reserve, Bitcoin should likely do well. And then we had strong Black Friday sales. That shows that the consumer spending, is very strong, up about 15% from the prior year. Online sales were stronger than brick and mortar store sales, but it shows that the consumer is still strong. So, what recession? I don't see one coming anytime soon. So that's good news. I had another inflation report, the Fed's preferred inflation measure, known as the personal consumption expenditures measure, that came out last week, and it came in line with expectations at 0.3% month over month and 2.8% year over year. But the 2.8% year over year was the highest year over year reading since April. So that's something we have to watch. It shows that inflation is higher than the Fed's preferred 2% goal, and it's a little sticky and trading sideways. But I don't think it's high enough to deter the Fed from cutting interest rates into December. And that's all what the market needs to rally, is just another rate cut in December. And I don't think this inflation report is high enough to alter the Fed's path. Maybe next year, with Trump's tariffs, that's an inflationary risk, and if that gets implemented next year, as well as some other perhaps inflationary policies, maybe the Fed will cut interest rates at a slower pace. They kind of alluded to that. Obviously, we have to see. But I also want to talk a little bit about Ripple. Ripple has surged the last few days and is now $2.70. It's now the third largest cryptocurrency. It shot up over $100 billion in value since Trump's election. And Ripple is something that we have to watch. It's an interesting project, interesting token, and it could be among the leaders, in my opinion, besides Bitcoin, Ethereum, Solana. Now I might add Ripple to that, crypto list with strong with the strong network adoption use cases. And one of the reasons why the run up, in my opinion, is that it looks like a spot Ripple ETF might be approved soon, and Wall Street's kind of looking for that. So investors might be front running that a little bit, but that's something to keep in mind. But yes, I'm optimistic that Bitcoin could hit over 100,000 by year end. We got so close last week. The S&P 500 should likely hit 6,300 by year end, according to my opinion and Tom Lee's. And look, I mean, the reason being is that the S&P 500 had a greater than 10% rally in the first half of the year, and it's an election year, and there hasn't been any times over the last half century where that happened, where December wasn't a positive gain in the market, and on average that's 3%, according to Tom Lee. So that's something to keep in mind. It makes me a little optimistic, especially with we might see more optimism and animal spirits in this market. And I might even put my 2025, next year's S&P 500 price target out there. I made other comments of where banks are putting their targets next year, but I would say for me, I'll say 7,000 is my base case. 6,400 for next year for the S&P 500 is my worst case scenario. And I'll say 7,500 is my bull case. I don't think the bull case is necessarily likely, but with the animal spirits we're seeing in this market, especially if we have more growth than expected, it could happen. But I would say 7,000 is more likely. The biggest risk, obviously, for next year is if inflation is stickier than expected, and the biggest risk is obviously if the Fed has to hike rates. I don't think they will. I think they'll just either hold rates longer or cut them at a slower pace.